Good morning. It's Realtor Randy with Mendez and Associates of eXp Real Estate Group, along with Sharon. And Sharon is with Alameda Mortgage, right, Sharon?
Yes, ma'am.
Happy Friday. Can you believe it's the Friday before Thanksgiving?
No, no, I cannot believe we've been doing this COVID quarantine stuff and it's now finally November. This is
I
crazy.
know, right? So I have to just start with a shout out. So Sharon, obviously we closed yet another transaction together this week. I think we probably closed multiple, but this one in particular, I feel like the topic today we're talking about are things that are giving buyers concerns, right? And I think there's just a lot of deflated buyers out there. And I just want to start with a shout out because we just closed a deal yesterday 3 weeks from beginning to end. And so we were able to get the buyers in despite multiple offers. Sharon and I were able to work hand in hand. And I have to tell you, I was on both sides of this transaction. And Sharon, not only did you get it done in 3 weeks, but you really took a lot of initiative in helping the buyer structure their offer. Because again, I kind of was playing that neutral role, and I was like, okay. And the great news is everybody was open, and there was transparent communication. But Sharon, you came up with a couple ideas that really like just helped that buyer to have the competitive edge and to beat out. I want to say it was like 7 or 8 other offers, of which all were quite a bit over asking.
Yeah, I mean, I was really excited about that deal, and I think that one thing I kept in mind the whole time was what is best for the seller. It was nice to have you on both ends because you let me know what the seller's concerns were, what they were up against, and we didn't use it against them. We used it to help all parties involved, me, you, buyer, seller, to make sure that everybody walked away with what I think was a great deal and happy. Nobody felt like, oh man, I got slighted. It was everybody walked away a winner. And it was the buyer called me last night at 7 o'clock last night to personally thank me. And she was in tears. And it was so rewarding. And I didn't ever get to talk to the seller, but I definitely felt like you probably got that same from the seller. They got 10,000 over the original appraised value. So it's kind of like one of those things where everything works out for a reason. Our buyer was looking at new builds. We were supporting it, but not super excited about it just because it's so competitive. And we knew that she would probably lose the interest rate. Just all around, it just came together. And I am so proud of that deal. I think I texted probably 4 different times.
Well, I have to say, in my
Really?
coaching company, on my coaching company, Real Estate Mega Moms, I always say to our agents, people don't know when you're going the extra mile, so you have to tell them. Like, they don't know, this isn't their wheelhouse. And so if you're doing something that's out of the ordinary for them and you're going above and beyond, or you're breaking a time record or whatever, like, if you don't point it out, they won't know to celebrate it. And so I talk to them about how confidently but humbly pointing out, when you're exceeding is a good thing to do, so the client knows, like, wow, I didn't know that was awesome, but thank you, right? And so it was funny because I was chuckling yesterday because I think it was like 2 or 3 times that Sharon suddenly was like, I just want to remind everybody we close this in 3 weeks. And so I loved that you were, because again, our buyer wouldn't, I mean, she never had another experience, right? I mean, she wouldn't have known that, like, especially amidst COVID, that, I mean, because we have some other ones together and we're like, oh, week 8, we're hoping for the appraisal, right? And so they
Oh,
didn't
yeah.
realize, but this is something what we want to do is today we're going to dive into these questions, and what we really want to continue to do is inspire you. So of course, last week we kind of talked to sellers. This week we're talking to buyers, and we want to inspire you because these wins are still happening. These home runs are still being hit. And even if you do have a transaction that is not as smooth or as quick, there's a lot to know. So kind of today, we compiled, and thank you all, because we've been, again, continuing to have a lot of people reaching out and letting us know their questions. And so we're going to go over the top 5 concerns that we see that buyers are having, starting with number 1. Home prices are continuing to go up. So are you hearing that kind of concern a lot, Sharon?
Yeah, I have quite a few buyers right now that are similar to what we talked about last week. They're getting on the fence because they're like, these home prices are insane. They're going up and up and up. And like we talked about before, we've changed the way that we do lending. We don't do it the same as we did back when we had the huge housing crisis. So I think that these home prices are going to continue to go up. And that's why right now it is not the time to say, oh, let's just get through Thanksgiving and Christmas. This is the time to stay strong and get in before the prices get up even higher.
Yeah, I completely agree. And here's the thing. I mean, I always just say, look at home ownership a little bit different. I mean, historically, it is the safest investment, right? Historically, I mean, there's still a lot of people that are betting on real estate. And even if you only saw a fraction of the return that we've been seeing, you're still seeing a pretty good return on investment, right? And so look, what are we comparing it to? I think that that's what we need to ask ourselves. So if you're comparing it to renting, I mean, anything, even a 1% a year appreciation would be a better return than renting, right? And so even if we saw it come down dramatically, if you saw, appreciation cut by 75%, you would still be winning. But take all that away. Here's the way I've looked at it. And I just, something I've always appreciated is when people talk to me the same way they would, if it was their own child, their own family member, their own friend. And so the way I tell my buyers is, for me personally, I just look at the value of homeownership aside from the gain of homeownership. I love being able to paint my own walls. I love knowing that it's not anybody else's house. I love knowing that, whatever I want to do, it's mine, right? So just the fact that it's mine, I probably would still buy even if I wasn't seeing a great return and I could just get those added benefits. Does that make sense?
It does. And let's also talk about, you made a comment, even if you get 1% equity. One thing I'm talking to a lot of my buyers about is, let's look at an amortization schedule. How much principal are you paying each month compared to rent? So let's just take a $350,000 home, for instance. And on that, your very first month, you're paying about $550 towards principal. That is putting $550 in a savings account, essentially, as opposed to paying rent, which you get nothing back. So even if you saw zero appreciation, you're putting $550 a month and gaining every single month in a savings account for yourself.
Yeah, because at the end of the day, you have the asset. And we talk about this a lot. There really isn't a bad time to buy. There are bad times to sell, right? I mean, there is times that the market is down. So that's another conversation that we have with you. If you're talking to Sharon or I and you're saying, I'm really, really concerned about where value is going to be and I'm just throwing a number out there, but January 2022, and I'm going to need to sell in January 2022, it's going to be a do or die, I have to sell. We might have a different conversation with you because you're going to be pigeonholed into a specific item, right? With buying a home, you buy when it works for you, but then of course you sell. I mean, you use some strategy when you sell, right? You don't sell when the market's down if you don't have to. And so right. Of course, if you're not going to be in that unique, and I've got to tell you, in 16 years, I've never had anybody come to me and say, okay, I'm going to buy this house, but I have to sell on this date. I've never had that happen. And now I'm probably opening a can of worms because I'm probably going to get this call this afternoon. But I've never had that happen. So just think about those things as well. Because like she said, now you have that equity that you're building, you time the sell of that asset right, and you're still going to come out ahead. Plus you enjoyed all the benefits that came along with homeownership. So I think we answered that. I think that that's, some good answers. Let us know if you have any more questions on that. So number two is the number two concern is interest rates are increasing. So what do you think about interest rates right now?
Oh man, it is, my crystal ball is broken, I think, on these things. The common thing you're going to continue to hear is, we're at rock bottom. We have seen the bond market come up a little bit, but we haven't seen rates change much. And what that means is, even when we were at our lowest in the bond market, we talk about lender capacity, we talk about just, is it a good investment for investors? So that's why we really didn't see rates get down to that 1% that people kept talking about in home mortgages. So rates are going to come up, period. Do I think they're going to come up soon? I would have said yes 2 weeks ago, but with this second wave of COVID, I think that they'll probably be at bay through the holidays. But that's a risk, because they are coming up. They are going to come up. It's just a matter of when. And every time we get a news about a vaccine, they pop up a little bit, but then unemployment will come out and they come down a little bit. But once again, this will run out at some point.
Well, and again, I think it's just looking at that bigger picture, right? Just having that more of an aerial view. So, when it comes to interest rates, I mean, these are historically low. Like you can't outsave these interest rates. So when buyers are telling me, well, I'm going to save a little bit more, it's just blowing my mind, to be honest with you, because you can't outsave them. I was looking at a chart, which, stay tuned if you're following us on Instagram and Facebook, because we're getting ready to do a lot of infographics. And I just saw one and I was like, oh, we got to make one like this. It was just so powerful. It showed your payment payment. And so it came down and it would show, 200,000, 300,000, 400,000. And so it went all the way down to $1 million. And then across it went based on your interest rate. And I immediately just went to where my house value is. And I went to what the current rate was. And then I went to what just a point to 2 points higher looks like. And I was like, we're talking about people being able to purchase completely different lifestyles right now. We're talking about people being able to increase their purchase power, trade up equity. I know that, again, we talked about this yesterday. Some sellers are hesitant, but the rates are at a great price. And, gosh, I'm a Dave Ramsey girl, so I might get some feedback for this one. But there comes a point where for me, I would rather go ahead and jump in and get something financed at a certain rate and keep my cash on hand because the rate is just so great. And I feel like that's where rates are. I don't believe in auto debt, obviously, because I'm a Ramsey girl, but, I beat up cars. In case you don't know, realtors beat up cars. And I live on a dirt road and I go a lot of rural places. So I really beat up cars. And when I was looking at it, they approved me for like a 2% interest rate, Sharon. And I was just like $15K in the bank. And like, I looked at the life of the loan and I sent a couple extra payments. I'm like, it made total sense to have that cash on hand. Do you ever do that? Do you ever look at money that way? I do that a lot.
Yeah, all the time. And I will tell you that money is cheap right now. So cheap. It's well, I won't say it again. Such a great time to buy.
Well, I love that you made it simple though. I was like giving this big analogy, and that's the point, right? Money is cheap to borrow right now. And I don't believe in debt and I don't believe in irresponsibility, but I do believe in homeownership. And I do believe in, leveraging that. And at this time you can position yourself even better for a 15-year mortgage, which is something else that, is very powerful. You can better position yourself to even get those homes paid off. Just think about that with these interest rates, how much quicker you can pay these homes off as well. So, okay, jumping into question 3. And I think that this is a really fair question. And I'm actually glad that this exists, but mortgages are harder to get. So what would you say to that, Sharon?
I think that we have both experienced this year in the fact that we have COVID overlays. So mortgages are harder to get in that sense that we have to be a little bit more diligent. We have a little bit more paperwork that we're having to accomplish over here on the mortgage side. I've had multiple buyers, and I'm sure you've heard it on your end, which is, I've never had to do this before. Why is it so hard? And in reality, it isn't that hard. It's an extra pay stub. It's an extra verification. It's an extra bank statement. It's a P&L or something like that. In reality, it isn't any harder than it was 5 years ago. We just started to get so relaxed in our mortgage guidelines that it got so easy. We just reverted back just a little bit, and it's just a little bit more security for our investors. And that is what's going to continue to keep rates low. But mortgages are still super easy to get. What a lot of people don't know is that you can buy a house with 3.5% down, 5% down. You can go rent your condo that you bought 2 years ago and only put 5% down on a new home. And a lot of people don't know how cheap it is and how easy it actually still is.
Yeah, and I would say that you probably agree, Sharon, but I'm really thankful for some of the increased caution in the mortgage industry. I'm thankful that we're properly vetting people. None of us, I don't think anybody's rooting for the downturn that we saw, in 2008, 2009. Nobody wants that. And a lot of that was, I don't even know. I know that there's a lot of reference to predatory lending practices, but it was, in my opinion, just complete lack of lending practices. Like you could just get a loan. And so, that's something as a homeowner who I do want my value of my home to remain. I'm thankful that the mortgage industry is being cautious and assessing their risk and protecting us, and that we've learned from downfalls from before, that how to better position ourselves. And so I'm actually really excited about that, and I think that that's something that you as the consumer should also be thankful for, because you're not being put in a position. We saw years ago buyers put in position, and the truth is you're not the expert. Usually 9 times out of 10 when you're the buyer, you're not the expert. You have, even if we talked about this before, even if you've done it 3 or 4 times, it's not the same as a person that does this 10 times a week, right? And so they were being told, oh, just buy this house with this adjustable rate, or you'll have interest, you'll have plenty of equity later, you can refi, or you can do this. And really, I mean, I think right now, if COVID has taught us anything, is that you want stability and you want security. And so what's beautiful right now with these rates and the overlays is when you're getting approved, you've been vetted, you've looked, people have assessed your risk. And in my opinion, that's a value add that somebody else that's more professional than I have assessed my risk and said, you know what, we believe you're going to be okay in this investment long term. And so we're going to go ahead and loan you the money. That gives me some extra peace of mind, not only as a buyer, but also as somebody who is, got investments in the real estate game. What about you, Sharon?
Agreed. 100%. I think the precautions that we have been taking in the lending is we have to protect our banks. We have to protect the servicers. We have to protect the investors out there so we can continue to keep money cheap. So we can continue to keep the market flowing the way that we have. And I do appreciate it. Yes, sometimes I'm annoyed by it because I'm the one that deals with a lot of it. But I do 100% appreciate it because I was around during the mortgage crisis, and we do not want to go through that again.
Correct. Yep. Myself included. I'm hoping to never have to pull out my short sale and foreclosure certification skills again. I really have no desire to go back to that era. But with that said, I also, it just kind of leads into the truth, the reality of question number 4, which is harder to find homes in your price range. And so, you can get excited about interest rates. You can get excited about the fact that it is still relatively easy to buy, but you do need to be aware that, it is harder, right? It is harder to find homes in the price range. And I'll kind of take lead on this one a little bit, if it's okay with you, Sharon.
Yes.
But, here's it's going to come down to relationship. So I see buyers all the time, and they're dabbling with a lot of agents. They're dabbling over here. They've got this agent working, and they also are hunting on their own for Zillow and Realtor.com. And here's the thing, in this market, it is imperative that you're in relationship with your lender and with your realtor, because we've got to go deeper than we've ever went. As professionals, I'm kind of thankful again for the industry that we're the market that we're in, because it's vetting out the guys that don't want to go the extra mile, right? Everybody wants to be a realtor, but nobody really wants to go the extra mile. It's tough. You got to get creative. You got to look on market. You've got to look off market. You have to be realistic. Every one of my buyers, I'm saying, guys, listen, I need you to know that there's a good chance we're going to see 3 to 5 rejections. And I say this very humbly, but that is not a norm for our team. We are very good at what we do. We are very skilled. We work very hard to have strong relationships. And I pride myself in getting our offers accepted, 1 or 2 times, but now we're looking at 5. And I'm just like, oh my goodness. So it is hard. And you have to definitely look at that list of, your 10 top items and know that you're probably only going to get 5 or 6, right? But again, it's about the long-term game, and it's about positioning yourself with the dream team, as 2 of our clients have named us. They call us the dream team. It was pretty cool. They actually named our group chat that. But it's about positioning yourself with a team that is going to help you plan for the now and the future, right? So I just had Sharon, we just approved another client together, and I jumped on a call with his wife, and I was talking to her, and we were talking about manufactureds. And I had to kind of, tell her like what are manufacturers. And I explained to her, the pros and the cons and how they can be a great stepping stone. Right. And so she was like, wow, I didn't think about it. And this isn't what I envisioned in my head. I really thought our first home would be our forever home and it would be our dream home. And now, I'm realizing that's not the case. But here's the thing. Was it a little bit deflating? I'm sure it was. Who doesn't want their first home to be their dream home? Right. But we were able to give her realistic expectations. We were able to show her options that if she opens up to them can be stepping stones to the long term. And then we're going to hunt on and off market. So yeah, it is harder. Of course it's harder. We're sitting on under a month's inventory, guys. Just so you know, a balance market is closer to 6 months. And in certain areas, we literally have like 3 and 4 weeks of inventory. So that's crazy. So it is going to be harder to find, but it's not impossible. It is not impossible, but you might have to sacrifice a little more. I think anytime buyers are probably only getting 8 out of 10 things they want, but you're probably only going to get 6. What would you say, Sharon? Like there's just going to be a little more sacrifice on some buyers.
I agree. I've talked to multiple buyers and I've had to say, we got to take our expectations down a bit. We have to take them down a bit. But at the end of the day, the reward is you own, not rent. It is your house. Like you said, you can paint the walls. You can put 100 pictures up if you want. I will tell you though, on the plus side, I'm not going to say which one on this call, and I don't think I've told you yet. One of the deals that we're working, the appraisal did come in 10,000 high. So, yes, and I won't say just in case, whatever, but one of our appraisals actually came in $10,000 higher than our offer, and we thought we were offering high. So, the deals are still out there.
I love that you said that. Two things. One, I love that you simplified it and just said, let's bring those expectations down a little bit, because that's the truth. Just let's bring them down, but let's be smart and let's position you so that, the next move, your expectations can be exceeded, right? Like, we'll position you that way. And there's a lot of great agents out there, lenders out there. We don't by any means think we're the only ones. So just really make sure that you're having those hard conversations. But the second thing I love is that you pointed out deals. I told you, Sharon, a couple of weeks ago, I had a deal that I literally was like, no, this is all the comp support. I was telling my seller, I was like, no. Like, we can stretch. Yes, we have an inventory advantage. We have market share, but we can't stretch that much. And we went ahead and met in the middle and we stretched. And then I just sat back as the offers came in $10,000 and $20,000 over. And I'm not that agent who adjusts my MLS. I don't do that. Some agents will adjust their MLS pricing to match. And I left it where it was because, that's where we were at pricing. And lo and behold, the appraisal came in. The appraisal came in for, $20,000 above ask. And I was just sitting there like, did you see the same comps as me? But then I looked at the appraisal and there was just new closings. And so you're right, there are still deals to be had. Yep, without a doubt. So, gosh, today we have got some good topics. I love this. Okay, so this one kind of ties into number 4 as well, but buyer competition is fierce, right? So, Sharon, I started off just kind of sharing a win, and it is fierce. Buyer competition is fierce. You do need to have thicker skin and a tougher heart than you've ever had to be a buyer right now. You have to have an agent that is willing to get creative and get in relationship for you, right? This is not the market where agents can just send offers over. If an agent's just sending an offer over, you're going to have a problem, because you're going to have 10 times the more disappointment, because I'm telling you, you can show a house at 2:00 and send an offer over at 3:00 and they're in contract before they even respond to you. So, I mean, it is requiring on my side, we've changed our standard operating procedures to where we're not calling after the client has, seen the home and says they're interested, because that's when we normally call. Now we're calling before we even show the home, because I understand the pain on a listing agent that you can't even keep up with how fast stuff is moving. And so you haven't been able to say, oh, by the way, if you show the home today, we've already got 8 offers, right? So you really need professionals that are in the mud. Sharon and I kind of spoke to these overlays. They're coming out of some of them. We had one, Sharon, that was a complete blind spot. Day of closing, we found out there was another overlay. So really what you need is, you need to know that the competition is going to be fierce, but you need to lean into the professionals and help them and listen to their forethought and position yourself. You need to be proactive and ready, and you need to be smart. I know that this is I feel like this is a very elementary statement, but we recently had a deal fall out. And we had buyers that had very high expectations in this transaction. I mean, they had unrealistic expectations, and they happened to catch the only seller in this current market that would meet these expectations. And I was shocked these buyers were getting what they wanted. And then, we get all the way to closing day. And Sharon, you'll remember me sharing this pain point with you, but the HR department for the buyer. So one of the things that happens now in the lending process is the verification of employment happens more than once because of COVID, because so many jobs are at risk. And so the mortgage companies are doing this verification of employment in the home stretch now at the final end. And they had actually called and done the verification of employment and had to leave HR a message. And the mortgage processor had been working so hard on this transaction, and the lender actually got them to say, okay, we can go ahead and release for funding. Literally, as everything is getting released, the HR department calls back the mortgage company and says that person quit their job. I was mind blown. So I feel like this is a very elementary statement to say, but again, buyers I think they don't live here. So it's elementary for us who live in this world every single day. But as a buyer, you need to be ready. You need to have your ducks in a row. When you need to have your documentation. That 3-week close that we just did, there was a huge amount of credit to give to that buyer. That buyer was on top of it. That buyer didn't cause delays. That buyer got the papers there. And why is this important? Well, yeah, competition is fierce. So here's the thing. Sharon and I had another deal together, and we lost one that really, had the buyer not drugged their feet multiple times, I mean, there was other moving parts. It wasn't 100% on the buyer, but had the buyer not drugged their feet, we would have met a window that kept the seller happy, and we wouldn't have lost the transaction. So when we talk about competition being fierce, I would just wrap it up by saying, get professionals in your corner that have forethought and experience, not only in the industry, but in the industry amidst COVID. Get a game plan, sit down, have those deep dive conversations and know what your game plan is. Lower those expectations and just be happy to get into this market, because again, for a lifetime, we've proved that real estate is a safe investment and helps you to create wealth for your family. So get into the game and be proactive. Don't quit your job. Don't add to your debt. Get your paperwork in. I know it's super frustrating. Sharon and I dealt with us as we went through a purchase of a second home in a lake house. And I was like, seriously, I'm pretty sure you got this like 6 times already, but deal with it and get them what they need, right? Would those be some of your top advice for the fierce competition?
Yeah, I mean, I think that when you talk about, first, get with professionals. Don't who your mom's friend, interview them. When you talk about real estate and your team, you guys are doing, the reason we're getting so many people in contract is you guys know what the competition is like out there. Like you said, this weeds out the people that are the mom's friends that are doing it on the side. Same thing with lending. You know that I've changed a lot of the things that I do in lending. I talk to clients about, how much do we have for closing costs? Can we go over appraised value? What does that mean, going over appraised value? What is that actually going to cost you on a monthly basis? How bad do you want this house? Lower expectations. I've had the talk with multiple clients. I'm talking a lot more to the fact of, okay, listen, maybe we don't get into the dream home, but let's get into a condo. Let's get into a townhome. Let's talk about future. You're 25, you're 32, whatever the age is. Let's talk about, maybe this is your rental property. Quit thinking that you're going to have 10 babies at this home. You know what I'm saying? Like, let's get into a rental property. Let's get you guys owning something. Let's build some equity. Who cares if it's not your dream home? Let it be somebody else's dream home in a year. So yes, it is lowering expectations. It is also keep helping you and my other agents, keeping these people focused on the eye on the prize, which is, who cares if you walk in and it needs a little paint? You're young, you've got muscles, you can do this. Who cares if it needs a little flooring? It's, things are not turnkey anymore. Like we said, people aren't having to do the repairs that they've done in the past. And so it's, what's more important to you? If we go back to the example of a $350,000 home, you're putting $500 a month towards principal. That's $3,000 a year that you basically put into a savings account, put 3,000 plus. So yes, I agree with everything that you're saying. The buyer competition is fierce. How can you position yourself to own and not rent or upgrade? Or turn, like we've talked about, turn your current home into a rental property and upgrade. What does that look like? 5% down. So yes, and I think that you have to align yourself with professionals that can have that hard conversation, that realistic conversation with you, and set you up for success. And that's why we're still getting buyers into homes and we're not sitting around on our hands.
Yeah, I mean, it is. I mean, I've had to level up, and I don't mind it. I'm thankful. I'm always thankful for the growth opportunity. It was a little bit of a tough bandwidth problem, right? So like I'm growing in my business right now, and I'm bringing people on because we have to go the extra mile. We have to position you. Sharon and I, or another lender and I, are both calling and saying, hey, let's, not only do we have an approved buyer, but we have a buyer that's going to be committed to the escrow process. I mean, you definitely. Again, I can't reiterate enough. There's so many tips we could give, but if we can give one, align yourself with professionals that are going to use skill and forethought, because you don't want to miss out on your dream house because you had an inexperienced person on the other side that didn't know how to present the offer. They didn't know how to structure the offer, or they just didn't know what they didn't know. I mean, I'm learning, guys. I've been doing this for 16 years at a high level. And, I'm fortunate enough to get to coach agents across the country. And it wasn't so long ago that I realized that, we could waive an appraisal with a financed offer. I remember going, okay, talk to me more about that. And again, we talk to our clients about the pros and the cons of these things. We talk to them about, what could be the downfalls, and we let them make the decision. But at the end of the day, align yourself with professionals that are going to empower you with all the information and allow you to make the best informed decision for your family to proper position you to build wealth through real estate, because it is a game changer. So that is our heart, that is our passion, and I have no idea how we did it, but we are literally 30 seconds from where we try to keep this about 30 minutes. So that was perfect. Sharon actually outlined the bullet points, so you must have done it perfect. Did you time it, or did you do this without me? Did you do a dry run without me? But as always, please, if we can be a resource to you, we would love that honor. You can always get a hold of myself, through my contact information. Sharon is hers as well. And then you can message our page together. Please follow us on Facebook, Instagram, and YouTube, and let us know what valuable information that we can bring you to help you guys along in your real estate journey and making your financial decisions. So thank you guys. And thank you, Sharon, for another Friday. I love doing our Fridays together.
Me too.
Yeah, we don't get to see, believe it or not, guys. We do a ton of deals together, but we don't get to see each other much. She grinds in her zone, I grind in mine, right? So anyways, happy Friday. And we won't see you guys. Actually, next week we'll be off, right? Because it's Thanksgiving weekend. So we'll be back the following Friday. And so have a happy Thanksgiving, and we'll see you guys then. Bye.